opinions expressed by the program participants are their own and do not reflect those of Blue Line Futures, LLC, or their affiliates. The content is for informational purposes only and should not be taken as trading advice. Futures and options trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for your financial condition. As a CTA, Blue Creek Capital may or may not hold positions in the assets discussed.
Hi, I'm Bill Baruch, and I'm here with my partner, Oliver Sloup. And thank you for joining us for a new episode of Trade It or Fade It. We are the founders of Blue Line Futures, an independent introducing broker, and Blue Creek Capital Management, a commodity trading advisor. Well, let's jump in. Where do you want to start? I think a great place to start here is talking about the Chinese Yuan. Not many people know that the Chinese Yuan is actually a tradable futures contract provided by the CME. And if you look at China, China is the growth engine, or was the growth engine around the world. If you're trading commodities, they're consuming commodities, and they can really drive the price of commodities. When their currency is stronger, they can buy more commodities. When it's weaker, they buy less. So I'm watching the Chinese Yuan very closely. The symbol on, I use a CQG platform. The symbol on there is CNH. And it trades the same months as other financial contracts. So it's a June contract right now. And it's just above 7.05. To put in perspective, because this is the USD CNH. So when it rises, the US dollar is strengthening. When it falls, the US dollar is weakening and the Chinese Yuan is strengthening. So right now, it's above 705. It's at the highest level since November. And to put that in perspective, last time it was up here, gold was below $1,700.
Wow.
So if you're following the euro or the yen or a basket of something of the dollar, you may not be getting the full picture of what's driving commodities on a day-to-day basis. So I recommend following the CNH. If you want to trade it, contact us. We can help you get involved trading the Chinese Yuan contract.
Yeah, I'm glad you brought that up because a lot of times so many people focus on a lot of the headline tradable markets, and for currencies, a lot of times that's the US dollar, the euro. The yuan is obviously one that a lot of people need to put on the radar, especially if they're trading commodities and precious metals. As of late, you can see a pretty big correlation in those markets. It's kind of like when people reference the Dow Industrial Average, when the S&P is really the real barometer of the stock index. It's a good comparison.
That's a great comparison. So let's jump into some of the markets we're watching out, other than the yuan, of course. I want to go back to crude oil. Crude oil had a pretty decent move today. It was the Saudi energy minister who talked about ouchies for those shorts and bringing the pain. Ultimately, he's talking about bringing the pain. He wants to see higher prices. Of course, they're not happy about the Saudi Aramco earnings, though that was pretty expected the revenue drop there. But they want to keep prices buoyant, and we have an OPEC Plus meeting coming up in about a week. Now, the CME they have a OPEC tool, kind of measure the probabilities the same way as the Fed Watch tool, measure the probabilities of a production cut or increase. Right now it's telling us there's a 21% chance that they decrease production at this upcoming meeting. And that's got crude oil from his conversation this morning off that $70 mark. It was sort of responding at $70 already on Monday, but we're back up here to the ceiling, not the debt ceiling, but the crude oil ceiling, 73.40 to 73.80. That was rare major 4-star resistance on the research we put out. Now, multiple times testing into this level could really, we reduced it. It's a major 3-star level. I think our first episode, I talked about a crude trade, yep. and we own that in the CTA, the Commodity Trading Advisor. We still have that on. It's an August 78.81 call spread. Now, we've traded, there's been a lot of opportunities within crude oil. So this is, for what purpose of discussion here, it's sort of, we've traded around it be a free trade here. And we're going to try and let this thing ride. At least it's an August contract, so there's, 45 days. Get us into, I think it's 45 days. Maybe it's 55 days. Yeah, 55 days. Get us through this meeting here. And if we really kind of chew through this $74, there's some resistance, we've highlighted in our levels, but it could be a quick move to 80, depending what we get, similar to that early April move. So I like the probabilities, kind of how we're lining up here right now. Now when we discussed, it was trading at 60 cents. It's trading almost about 80 cents right now. And remember, crude fell out pretty heavily. There were some pretty decent opportunities to kind of look at rebounds in crude, trading some of the futures and those liquid futures. But yeah, that's how I'm viewing it right now. I think the risk is a little bit to the upside, but it's been a constructive move. What's your take there?
Yeah, well, I remember you bring that trade up. It was kind of, I think it was right before, right after that flash crash where we saw the bottom kind of fall out and capitulate there, and then we started to build a base around $70 and just chopping around. And I think that there probably is some more upside potential. I remember when you first brought that trade up and kind of talking about the time frame. It's one of those strategies where you don't have to be right now. This is a little bit not necessarily an investment, but more so than of a day trade or a swing
Absolutely,
trade.
Yeah. Something to sort of position with and sit with. And, given the Chinese yuan, it's one of the commodities that actually over the past 2 weeks, when the yuan has really kind of fallen out of bed, that's actually trading pretty well. Look at copper. Look at what some of the metals have done. I don't know how much the yuan is really affecting wheat right now, but wheat's had a little bit of a tough road.
Well, talking about ouchies.
Yeah.
The grain markets just got absolutely pummeled over the last couple of weeks. Corn, soybeans, and wheat. Previously, it was mostly just wheat, but corn and beans joined the party last week. We saw levels not seen since 2021. Recovering a little bit here this week, corn and beans, and even wheat making a move higher in today's trade. But as far as laying out a trade to trade it or fade it, I think the grain markets are going to take a back seat because this is just a weekly show. If it were a daily show, I'd certainly have something for you. If you're not subscribed to our daily research, you can do that at bluelinefutures.com. We put a lot of great daily actionable ideas out there each and every morning before the open. But for the grain markets right now, it's really weather season, which is kind of the Super Bowl for grain traders.
Yeah.
An extended Super Bowl. You get the volatility week in and week out, and a lot of opportunities come with that. And for producers who maybe can't stomach the volatility, CME Group has great tools to help manage that risk, especially ahead of long weekends. New Crop Weekly options are a great tool to help minimize that risk, or if you're just looking for a trade to gain market exposure with limited risk.
Yeah, no, I agree. And for what it's worth, we do have some wheat exposure with calls in our CTA as well. We're down on those, but we've been trading around that a little bit over the past about month and a half. So that's it's kind of keeping an eye on the $6 mark. And I've been with you. I've agreed with you here that we should see a sustained short covering rally, but it hasn't really come to fruition yet.
Yeah, well, a lot of it. It's just based around the fact that there's risk of that short covering rally. And although we haven't gotten it, that risk still persists, and still optimistic that we can get that. But again, it's kind of like the crude trade is an option strategy. It's limited risk. You know what it is.
Exactly.
You're not going to lose any sleep at night with that position.
Yeah.
And I think there's still opportunity for that to come back alive.
Yeah, absolutely. We've kind of rolled it and moved it a bit. So if you want to learn more and talk about positioning specifically, always feel free to reach out to us. That's why we're here. That's why we're doing this. Just kind of be transparent with some of the things that we're looking at where we see value. That's where you get to choose to trade it or fade it. And that brings me to gold here. It's been a heck of a week and a half for the metals because of that Chinese yuan. We've also seen rates ascend, which happens to be you look at the treasury prices, the bond market. I mean, the bond market's probably been down for 7 straight days now, and it just tried flirting with unchanged on the day here with a little bit of risk off in the equity markets. But if the treasury market's going lower, you got the Chinese yuan weakening, you have the yen has also been lower too. These are all big headwinds for the metals. As they go lower, they sort of drag the metals lower, the metals complex, those recessionary, those growth fears. There isn't a proactive copper cartel out there right now. There is the OPEC cartel, and that's buoying some of the crude prices, but you're not getting that in things like copper. But the Fed is a little bit of a cartel for gold, and that's really kind of brings us to does the Fed hike rates or do they not come this June meeting? And one of the discussions we had last week was whether or not the Fed Watch tool, the CME has that Fed Watch tool on their website. And were the probabilities high enough that they could be hiking rates 25 basis points at their next meeting with middle of June? And we've seen that kind of fluctuate around 10%, and I think it's gotten up to 28% or so here today. And I think that it's been as high as 40. So I think that 20 to 40 is fair value, but I would expect potentially to see upwards in the 40 again. Now, does that mean gold has to sell off of that? It's just sort of what are the risks out there? Kind of we hear the debt ceiling talks fall apart. Gold gets a little bit of a bid. It did not break below last week's low here today, and we have exposure. We're long gold. We're trading it. We're pretty active. We're very active. I manage a metals portfolio for our CTA, and we're very active. So we're always doing things. And some of the gold, if you're looking to get long and have long exposure in gold, now I wouldn't say there's tremendous value after a day like this where you come off the lows. We traded down to 1955, which is that support level that we were talking about last week. We finished the session up about 1977, and that's on the debt ceiling falling apart. So one of the ones I'm looking at, though, if you're looking for exposure to be long gold and more about this is gold's time to be breaking out, a 2025 to 2100 call spread for August, that gives you 60 days. Now, it's not cheap. It's $19, which is $1,900. But we've seen this CVOL, the CME's CVOL tool, which, again, you can Google CME CVOL, take you right to that. We've seen that CVOL come down as low as just below 16 last week when we were falling out. It's back to right around 17, and it's just that's been where it is. Options are not cheap. Neither are they expensive relative. We've seen that CVOL upwards toward mid 20s to nearly 30 recently. Through that March banking crisis. So they're not cheap, but if you're patient and you're using the time to find a little weakness to capitalize in gold, I like that spread. Again, I also like rolling that spread down a little bit if you're getting it at a better price. You pay that price something a little closer to the market. With 65 days, we're trading just below 1980. Gold has got to get above 1990 this week. I think if it doesn't, we can start to see some fading into that. So it'll be interesting how these debt ceiling conversations unfold here as the week goes. What are your thoughts on that?
Yeah, well, last week when we talked about gold, too, we talked about some of the technical levels. And one that I was keeping an eye on, still keeping an eye on, is that 100-day moving average and trend line support that goes back to the November lows. And that comes in right about 1937, 1940. So that, to me, is a must-hold level.
That's the risk.
As I'd mentioned, I'm kind of a permeable myself at this point.
Yeah.
So I hope we don't get down there. But at that level, I think that represents a great risk-reward opportunity to look alongside if you're bullish the metals.
Yeah, if that's something, again, that you're looking at, we can help you work some orders and kind of see if the market were to be selling off, that could get you an opportunity to get filled at a better price.
And also, you talked about the CVOL and options not necessarily being cheap, so to speak. And there are different contract sizes, which are great tools to gain market exposure too. There's minis and micros that are a lot less leverage.
Yeah.
So you're not, having the big swings like you do with the full-size contract.
Yeah, 10 ounces of gold is the micro contract, and so at 1970 it's $19,700 exposure with initial margin of less than $1,000. So get you exposure in the market, so you don't have to go straight to an option. You can use these micro contracts and be able to sort of price it, and it's much easier to work limits on something like that rather than having to go buy coins somewhere and pay $100 or $150 premium in a market like this right now in this environment. But that's kind of how we're looking at things. Again, we still like the seasonality with gold. Has been tough to. It's this June contract is kind of distorts, I think, the seasonality. But once we get through this June contract expiration at the end of this week, options expire Thursday, and then that completely rolls off. I think that's going to pave a way higher for gold. But then it's be about the data and about the Fed, and that's why we're here every day to kind of keep monitoring this, and that's what makes a market. So that's how we're looking at gold. You can trade it or fade it, and we look forward to hearing from you.